Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Katie Greifeld.
All right, let me get to some of the individual gainers. Vertex Pharmaceuticals closing up more than 8%, best day since December of 2023. Top performer in both the S&P and NASDAQ 100. The biotech company said its drug to treat a kidney disorder met its goal in a late-stage trial, providing a boost to its strategy of moving beyond cystic fibrosis treatments. RBC Capital Markets weighing in and said the positive data showed exactly what was necessary to confirm the drug's high potential and gets the company past their key unknown for 2026. He estimates the drug could eventually generate about $5 billion in sales if it can win approval in multiple conditions. Ciena, a top performer too in the S&P 500, that one gaining ground as well, up about 6%. It's a $48 billion market cap communications equipment company. A couple things at play. Analysts raising price targets for this one since the company reported earnings last week on March 5th. 12 analysts raising price targets by an average of 24%. Needham analyst Ryan Kuntz saying several networking and optical technology companies positioned to benefit from rising hyperscale cloud spending as AI infrastructure continues to expand, and he did identify Ciena along with a few other companies as a result. One more for you. Rivian rallying. TD Cowen coming out, upgrading the automaker to buy from hold. The analysts there positive on the stock's risk profile going into the launch of its R2 midsize SUV. That stock up more than 4%, Rivian that is. Price target to 20 from 17. Stock still down about 14% year to date. Nearly 16% of the float is short. And keep in mind, this one is still down 90% since a high back in November of 2021. But TD Cowen liking it, investors too, pushing it up about 4% today, guys.
Well, let's dig into some of the decliners on the day. We're looking at shares of Boeing down more than 3% at the closing bell. This is the biggest drop since November for the stock. This is after Boeing said that a wiring flaw found on its 737 MAX will delay some deliveries of the jet. This, of course, sending shares lower at the closing bell. The company said its overall delivery target of roughly 500 of the 737 jets for the year remains unchanged, despite the quality lapse. But clearly the street is not really liking this news. We know that the stock did rebound in 2025 year to date after having a pretty dismal 2024, down about 32%. But if we look at the activity for this year alone, it's up just about 1%. So it seems as though Boeing is really trying to vie to get a lot of its investors back on board here. Moving from there, let's go to West Pharmaceutical Services. This company has struggled this year. Today, we're seeing the stock down more than 5% for its worst day since February of 2025. The stock is down about 15% this year. But today, we're seeing it lower after the company said that long-term CEO Eric Green plans to retire, this marking the second recent exec change after announcing the hiring of a new CFO last year. So some of those management changes weighing on sentiment in the trade. Lastly, let's wrap things up with Centene. This is seeing its worst day since July of 2025. This company is about $18 billion in market cap, a healthcare managed care company based in St. Louis. We did see that shares were sinking. The company said it expects enrollment in the ACA marketplace to decline by about 35% or more across the industry after some federal ACA subsidies did expire. So not great news for the company. Shares down about 16% on the day.
All right, let's take a quick look at yields here. We did see a lot of volatility in that space, but the net effect is yields higher on the day. Your 10-year yield up for a sixth day in the past 7, up about 5 basis points. Your 2-year yield up for a fifth day in the past 7, up about 5 basis points. And the longer end of the curve, you don't have it up there. Oh, there it is. The 30-year yield saw the most activity there in terms of the sell-off, with pushing yields higher by about 7 basis points.
All right. Of course, we are awaiting Oracle's earnings, so just kind of glued to our Bloomberg. We'll bring you those results as soon as they cross. There we go. Stocks moving up. Romaine.
Oracle shares, Oracle earnings out crossing the wire right now. 3Q adjusted revenue does appear to have beaten estimates. The company saying that it saw a 22% growth to about $17.19 billion. The street was looking for about $16.89 billion on a constant currency basis, up about 18%. Cloud revenue up 44% to $8.9 billion, and cloud application revenue up 11% to $4 billion, roughly in line with estimates. Software revenue also higher here off of those numbers. And still looking here, and here is your revenue guidance. The company says that for its total revenue guidance is now being boosted to about $90 billion. I need to take a closer look at that comparison here. And we need to dive in a little bit deeper into that CapEx number, which is going to be buried deeper into the release.
Yeah, still looking for CapEx, still looking for their cash flow as well. That was negative to the tune of about $10 billion last quarter. You can see shares, though, popping right now, higher by about 4%. But, Carol, it's important to note how low the bar was heading into these earnings. Their last high was on September 10th, and through today's close, down more than 50% since then.
Yeah, interesting to see. I was just kind of going through the press release looking for a little bit more in terms of capital expenditures. But what's interesting is you are seeing this stock up about 4% here in the aftermarket. So investors, at least initially, liking what they got here, Nora.
Right. And it seems as though, Oracle needed this win. As Katie was saying earlier, the bar was pretty low. But, investors will really be focused, as I was hearing from some of my sources, on the cloud business. And that's specifically how quickly Oracle can turn major bookings from customers like OpenAI into actual revenue.
Yeah, and there was a lot of discussion here coming into this. Remember, we had seen reports by Bloomberg about the company scaling back in terms of headcount, scaling back in terms of some of its spending plans with regards to that Stargate center down there in Texas. And the idea that coming into this report, investors really wanted to see what that CapEx number could be or would be, and whether they would raise it or maybe even curtail it. We are now starting to get a little bit of a trickle here about the forecast. The company saying that for the current quarter, the fiscal fourth quarter, it expects revenue to grow from 18% to 20% on a constant currency basis. The company, they're guiding, so I guess slightly higher than what the street was looking for.
Yeah, absolutely. That revenue guidance, too, again, up to $90 billion, certainly catching the attention of the after-hours trade. It's going to be interesting, too, to see how this is reflected when it comes to the debt markets. Obviously, very much in focus when it comes to Oracle. Heading into this report, you consider that when it comes to their 5-year CDS at the highest level since January 2009.
All right, so I just want to go back here to those numbers here, just diving through the release. The company says that for the full fiscal year, which basically ends this quarter, they're expecting capital expenditures of about $50 billion. That's unchanged from its previous guidance. For the fiscal 2027, the company says it is raising its total revenue guidance to that $90 billion number, but it is not, at least not in the press release, providing a CapEx figure. So maybe we have to wait for that until the conference call.
Yeah, it sounds like that's going to be something that's certainly going to be asked about. But again, we continue to see this stock now up about 7% here in the aftermarket. So we're definitely seeing a pop to the upside.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.